Welcome back and good afternoon. I'm Holly, live from Kalkine Studio, and you're watching The Market Movers. Let's zoom our lens on over to the Australian share market performance, the driving forces behind investor sentiment, and the major ASX-listed stock movers under the spotlight today. Australian shares crashed more than 1% on the last day of the week, taking cues from the weaker Wall Street closing. On Wall Street, the US equity markets traded lower on Thursday, reverting from record closing in a broad sell-off driven by uncertainties surrounding the pace of US economic recovery. Worries about Beijing's crackdown on foreign-listed Chinese firms also put a halt on equities. Meanwhile, the new data on Thursday on the filing of new unemployment claims by Americans depicted that the jobs market recovery from the coronavirus pandemic continues to be choppy. Closer to home, however, while Tech Rout pulled down the strings of the ASX 200, the market sentiments were also dented by the virus woes. The country's most populous state of New South Wales reported its highest daily rise in local COVID cases this year, fueling concerns regarding an extension to restrictions. New South Wales is facing the biggest challenge since the pandemic started. 44 locally acquired cases were reported in the state on Friday, eclipsing 38 a day earlier, with 29 of those having spent time in the community while infected. Authorities will also tighten restrictions in Sydney from Friday evening, with public gatherings limited to 2 people and residents limited within 10 kilometres of their home. Officials are struggling to contain the outbreak of the highly infectious Delta variant in Sydney, despite Australia's largest city about to enter its 3rd week of a hard lockdown. The total cases have topped 400, and looking at the sectoral chart, tech stocks remain the leading drag, given the ongoing Chinese Tech Rout and a weaker closing at the Nasdaq 100. Afterpay, Zip and Nearmap were the top losers on the board, plus Xero and WiseTech also edged lower. Then domestic mining stocks BHP Group, Rio Tinto and Fortescue Metals all traded lower amid pressure on metal spaces. On Thursday, Chinese coke and coking coal futures fell to a 1-month low, and iron ore prices fell as much as 3.6%. Steel production cuts at some mills raised concerns over sustained demand for the steelmaking ingredients. Onto the healthcare space, Australian health stocks extended losses on the dollar weakness. CSL, Sonic Healthcare, PolyNovo edged lower. Then in the financial sector, the big 4 ASX banks, Commonwealth, Westpac, NAB and ANZ, traded in the red. Meanwhile, an uptick for Australian energy players provided some support to the major market downfall. Viva Energy remained the top gainer on forecasting a strong first half result. Petroleum player Ampol also grabbed the top gainer spot on the ASX 200. Plus, Beach Energy, Woodside Petroleum and Oil Search traded in the green zone amid further oil price uptick. Crude oil prices ticked up on Thursday, rebounding from losses in the early session after US government data revealed that crude and gasoline inventories fell more than expected. And on that note, it is time for a short break, but don't go anywhere, stay with us, and I'll be right back with more trending updates for the Australian market.
This is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back, I'm your host Holly, live from Kalkine Studio, and you're watching The Market Movers. Next on our show, let's have a look at some ASX listed stock movers under the spotlight today. To kick it off, Viva Energy Group skyrocketed on forecasting a strong first half. The leading energy player has forecasted first half underlying EBITDA between $390 million and $410 million for the financial year 21, a 34% rise from the corresponding period last year. According to the company, while retail fuel sales continue to be impacted by periodic lockdowns and aviation by ongoing border closures, overall growth across retail and commercial channels has been very encouraging. Then, medicinal cannabis supplier Cann Group gained on partial fund recovery from cyber attacks. The company recovered about $1.2 million of the $3.6 million lost in a cybersecurity incident announced in February. The company was undergoing proceeding in a Hong Kong court against a third-party defendant to recover funds lost in the cyber attack. On to the next stock making the headlines in the small cap tech space. Audinate jumped on flagging a strong fourth quarter. The company now expects revenue of $25 million in the financial year 21, a rise of 23% from the previous corresponding year. It said loosening COVID-19 restrictions helped the June quarter revenue rocket 74% on the prior corresponding quarter. On top of that, Australia's biggest airport operator, Sydney Airport, is headed for its best week ever after receiving a $22.26 billion offer on Monday. The airport fetched 8.25 Australian per share from a consortium consisting of infrastructure investors, IFM Investors, Q Super and Global Infrastructure Partners. The company is reviewing the IFM proposal, but noted that it was below its pre-pandemic share price. Well, the next newsmaker under the radar is global mining services group Perenti, who rose on inking a $280 million contract. The company announced that its subsidiary Barminco has signed a $280 million four-year contract with Panoramic Resources for the development and production works at the Savannah Nickel project in WA. Next up, betting firm Tabcorp is set for its worst week in 16 after Lotteries and Keno spin-off. Tabcorp on Monday said it would spin off its Lotteries and Keno business into a listed entity, drawing an end to a company-wide review it undertook earlier in the year. Credit rating agency S&P Global Ratings said it believed the demerger of Tabcorp's Lotteries arm would materially reduce its earnings quality, scale and diversification. Next on the list, Rural Funds Group dipped on completing institutional offers. Rural Funds Management has completed the institutional component of its fully underwritten 1 for 8.4 accelerated pro rata non-renounceable entitlement offer to raise nearly $100 million. Meanwhile, drug maker Althea Group surged on securing a manufacturing deal. The manufacturer and distributor of pharmaceutical cannabis products said that its Canadian subsidiary Peak Processing Solutions has signed a manufacturing agreement with Delshen Therapeutics Corp. Delshen is a wholly owned subsidiary of 48 North Cannabis Corp, a leading Canadian cannabis licensed operator and brand marketer. Under the agreement, Peak will manufacture 4 products for 48 North's well-known Latitude brand. And last but not least, copper and gold miner Hot Chili rose after the company unveiled its intention to list in Canada on the TSX Venture Exchange by the end of this year. The move of dual listing in Canada is a crucial step for funding and developing the company's large-scale Costa Fuego copper-gold project in Chile. All right, then, that is just about all for now, but I hope you enjoyed the program. Stay tuned with Kalkine TV for more news on markets, economy, and diverse themes and sectors. Holly signing off.